For investors trying to get a clear read on the economy, recent reports are sending mixed signals. The latest jobs report was weaker than expected. Only 73,000 jobs were added in July, and there was significant downward revisions to earlier months. This has raised concerns about the accuracy of employment data and even led to President Trump firing the commissioner of the Bureau of Labor Statistics. But at the same time, GDP growth in the second quarter appears to have rebounded with a strong 3% increase, and corporate earnings are beating expectations, pushing the stock market to new all-time highs. So how can both things be true? The reality is that understanding the economy is never as simple as looking at just one or two numbers. Government data, whether it's jobs, GDP, or inflation, is built on massive surveys and statistical models. It's not perfect. It's always been an estimate. And those estimates get revised as better information becomes available. This creates tension. Investors and policymakers need timely data to make decisions, but getting precision takes time. That's why no single report should be taken as gospel. Instead, it's important to focus on trends and understand the bigger picture. So let's look at the broader context. Yes, the jobs report numbers were disappointing, and yes, revisions show the labor market was weaker than we thought. But other signs of the economy, like GDP growth and corporate profits, remain strong. Inflation is still running above the Fed's 2% target, and tariffs are creating uncertainty, with some early signs of rising consumer prices. This is why smart investors don't rely on a single data point. They use a range of public and private sources to build a fuller picture, a strategy we often call the mosaic theory. That includes jobs, growth, inflation, earnings, and consumer spending, all viewed together over time. Finally, it's important to understand that while government data has its flaws, it remains the gold standard globally. The agencies behind the numbers are staffed by professionals, not political appointees. And the revision process is actually a strength, not a weakness. It helps improve accuracy as new data comes in. The bottom line, in a time of uncertainty, the key is to maintain perspective. Data can be messy and even seem contradictory, but staying focused on long-term trends and using a wide range of reliable sources is the best approach for informed, confident investing.